In this video, we're talking about what the Bank of Canada is likely going to do with interest rates in 2023 and beyond, what this means for the real estate market, and ultimately how this affects you. I'm always a little hesitant making videos like this because they can sometimes appear like doom and gloom. You know, all those clickbait YouTube videos you see where the thumbnail is all, and there's fire and explosions and the world is ending in the background. Well, in this video, we're going to be breaking this down logically and analyze the clues that the Bank of Canada is giving us. All right, first things first, and just a quick disclaimer, be sure to speak with a professional before making any financial decisions. Try not to speak to someone like those two idiots in The Big Short.
How many loans do you write each month?
About 60. Yeah, I was a bartender. Now I own a boat. You own a boat.
A good professional is worth their weight in gold. When I had a couple mortgage renewals come up in 2020, my mortgage professional and I had about a 2-hour conversation about the economy, all the stimulus that was being produced, the strain on the supply chain, and whether inflation was a concern. So this was really helpful in making my renewal decision at the time. And some mortgage professionals would just send you the paperwork, you sign, and away you go. So seek out a good professional because it's well worth it when you find one. So how does the Bank of Canada's interest rate policy affect you personally? If you're someone with a variable rate mortgage, then every time there is a rate hike, you will be impacted immediately. It also affects people with revolving credit or credit lines like a line of credit. People with fixed rate mortgages, however, won't see an immediate impact to their mortgage payment, but come time of renewal, that's when they will be faced with likely a different interest rate environment than when they first took on that mortgage term. And it goes without saying that nobody has a crystal ball or can predict the future. So the best thing we can do is just look at the clues that the Bank of Canada is giving us and try to formulate what likely scenarios there could be or what the next move is. And you want to stress test those scenarios for your own family's sake so that you're prepared for even the worst case scenario. Right now, the biggest battle that the Bank of Canada is facing and the most important area to focus on as to where the BOC might be headed with their policy is inflation. There are many different factors that go into measuring inflation and interest rate policy, but based on current comments from the BOC, if you want any indication on where they are going with interest rates, this is the best place to start and focus on. And it's the CPI, or the Consumer Price Index, that is basically the guiding post of inflation, which is reported monthly. And for those that don't know, the Consumer Price Index is what they call a basket of goods, which is what a typical consumer purchases on a regular basis. In Canada, there are 8 main categories that make up the CPI, which is food, shelter, household operations, furnishings and equipment, clothing and footwear, transportation, health and personal care, recreation, education and reading, and alcoholic beverages, tobacco products, and recreational cannabis. The BOC has made it quite publicly clear that they intend on getting this inflation number under control. While the BOC's policy is to have inflation in the 1 to 3% range, there was a statement not too long ago where Tiff Macklem said he is set on getting inflation back to 2%. I'll put that link to the article down in the description below. The focus isn't 3%, which is within the BOC's range. It's not 2.5%, but 2%. And right now, we are a long ways from there, so I think it's pretty easy to make the call, and the writing's kind of on the wall that the BOC will continue to raise rates in 2023. Maybe not as aggressively as they have been doing, but personally I think more rate hikes are likely to come. So where is inflation now? Because that can give us a strong indication of where rate policy might be headed in the future. The latest monthly report for November 2022 was released, and while we saw a small 0.1% drop month over month in November, inflation is still sitting quite high at 6.8% in that report. It's a long ways from their 2% target. And keep in mind, November's small decline was also off the back of 3 consecutive months of really no change. It's yet to be decided, but as of right now, it appears like the peak was in June of 2022 at 8.1%. And even though it has come down a bit since that summer supposed peak, it's still high and hard to determine if the measures the BOC has been taking are taking full effect in the economy. I can honestly say that right now I would not want Tiff's job for no amount of money because the BOC is in a really tough spot. Every time they hike rates, it causes pain to a lot of households in Canada, but so is inflation. In an indirect way, the BOC is also causing inflation on people who own homes because mortgage interest falls into the shelter category of the CPI, and every time they hike rates, those costs go up immediately for people on variable rate mortgages. I've talked to a lot of people personally who have mortgages that have gone up $800+ per month just this year alone. This also affects rental costs too, because as landlords' costs go up, they try to pass along that added cost to renters in the form of increased rent. And this inflationary period that we are going through is extra difficult for the BOC to navigate because it was largely created by the BOC and the government to begin with. Lowering rates to record lows like they did during the pandemic, quantitative easing stimulus into financial markets, massive government stimulus checks, extreme demand on household goods, but an extremely strained supply chain. This is all a very complicated beast, this inflation that we're seeing. So again, personally, I don't think they are done raising rates in 2023 unless inflation and the CPI started to show signs of coming down significantly. In my opinion, as long as inflation stays high, they are going to continue to act, and they're going to pull those levers, which are interest rates, to try to get inflation down. The one outlier that I think could surprise the BOC and markets is if the supply chain returns back to 100% full capacity. This could really ease supply and demand on consumer goods and in turn ease inflation. So for a really simplistic approach, just keep an eye on the commentary from the BOC, and if you don't feel like becoming an amateur economist, just try to stay informed with the CPI, which reports are released monthly by Statistics Canada. I'll put that link in the description below as well. And what does this all mean for the real estate market? Well, it's important to understand that interest rates are just one of many influential drivers driving the overall housing market. There's things like employment, economic growth, household incomes, demographic changes like population growth or relocations to different cities or even different parts of the country, and the list goes on. There's also some pretty big changes coming in 2023, which will be interesting to see how that affects major markets like Toronto and the GTA and Vancouver and the Greater Vancouver market, with the ban on foreign buying taking place and effect on January 1st. And there's a saying in real estate too, that all real estate is local, because it is. Each individual market is different and behaves differently. It's also important to note that while the rate hikes we've seen have been quite aggressive and very sudden, catching a lot of people off guard, historically where they are today is quite normal on average. I feel like one of those, when I was a kid, I walked uphill both ways to school when I say this, but in all seriousness, my first mortgage interest rate was 6.9%, and that was only 15 years ago. So when it comes to whether right now, 2023, or if any time is a good time to buy a home, only you can decide that. It really depends on what your needs and goals are. No one on YouTube, even though there was a bunch of videos about it trying to convince you one way or the other, can make that decision for you. Trying to time the market is an impossible game because no one has that ability to predict the future. And generally, buying a home is a long-term plan anyway. So if buying a home today makes sense for you, then don't worry about where interest rates are today, because 10, 15, 20 years down the road, this will be a blip on the timeline. Where they are today, of course, affects you and your purchasing power though. Where do you see interest rates going in 2023 and beyond? Let me know in the comment section below. And if you're into this kind of content, that's what we're talking about on this channel. It's all things real estate. So consider subscribing to the channel, hitting that bell so you get notified when new videos like this are uploaded. And I'll see you in the next video or down in the comment section below.